Welcome to the Navigating Dental Insurance Podcast, where we don't take from insurance companies. Here are your hosts, Mr. Jordan Comstock and Mr. Ben Tuine.
Welcome to another exciting episode to the Say No to PPO series. We have a special guest out of Canada who has an impressive background in replacing insurance in various industries. The purpose of our Say No to PPO's podcast series is not to boycott against insurance. There are positives to insurance, but there are also many frustrations in understanding how to deal with insurance benefits within the dental practice. Our purpose is to enlighten you with the best known practices and products that will make your life better when it comes to dealing with insurance. While we embrace the challenges insurance presents, we recognize that there are other alternatives to dental insurance that may benefit your practice. One of which is my in-house membership software that I provide my private clientele. Another is what our good friend Kadir created that we are excited to present you today. But before we introduce Kadir, I'm going to hand over the mic to Ben, my co-host, so he can go over a personal experience about how insurance may interfere with quality care.
Good afternoon, everybody. Thank you for attending this webinar. This is the revolution, folks. I know that many of you that are on this call are frustrated with dental insurance. You're frustrated with submitting things to insurance and not getting paid. And then when you do get paid, you get paid a rate that is hardly able for you to support quality dentistry. For those of you that know me personally that have either been a client or have subscribed to any of the educational material, everybody knows that I am not a dentist, but I am trying in the best way that I can to promote quality care, at least the financial aspect of quality care, by negotiating better insurance reimbursements. This webinar today is the first for our clientele and first for many of you. This message has already been out there with our folks at ProCare Dent. They've been promoting this message across the country. This is our first opportunity to have a good friend, Kadir, on this call with us today. I'll introduce Kadir in a minute, but I'd like to go through quickly the purpose behind why we're doing this. Now, as a non-dentist, hard for me to speak about how you define quality care and how to really tap into the emotional aspect behind why a lot of you are frustrated with dental insurance in general. But if I may, I'd like to share a personal experience with you that will speak to the quality care aspect of at least support my thoughts, ideas, and my mission and passion behind why I believe quality in care is important. So the screen's blank. Don't worry, your computer has not failed. The next slide, for those of you that may have had a premature baby or may have experienced a child that was born too early, I do apologize about the emotions that brings up, but I'd like to share this personal story with you a minute to kind of set the stage and set the tone behind why we're doing this revolutionary podcast series, as well as this whole message behind replacing insurance or having an insurance alternative that will help protect quality care. So meet my son. This is my son, Welton. He was born at 24 weeks gestation. To put that into perspective, that is 16 weeks early. 1 pound, 10 ounces, 13 inches long. Needless to say, a young and suffering little child. The story behind this is that at 19 weeks gestation, my wife starts to experience signs of kidney failure. At 22 weeks gestation, she starts to show signs of liver failure. And then at 24 weeks gestation, she shows signs of heart failure. You see this multiple organ failure effect, a domino effect that's going on. And for any of you that have studied medicine or understand the effects of the heart failure, is that after the heart fails, it's the end of life for that individual. To give you some background about myself and my wife, we're athletes. We both played sports in college. I played football. She played softball. So for healthy individuals, sometimes life just happens and you receive these curveballs that are somewhat tough to deal with from time to time. In this situation, 24 weeks gestation, her heart starts to fail, which is a sign of early signs that she is probably not going to make it through this pregnancy if we don't do something quick. The doctors at this point recommended that we perform a C-section, and that's exactly what we agreed to. So this is Welton just minutes after the C-section. You can see the bruising on his legs. The child is just suffering, as you can see. And kind of hard for me to feel sorry for myself. This is the first child. My wife was in another hospital bed, the only healthy individual in the family. Tough to feel sorry about yourself. But the one thing that I learned in this experience, or at least during this very moment, was as a non-clinician, how can I contribute towards the care of both my son and my wife? Shortly after I snapped this photo, I went to my wife. Actually, they wheeled her back to her recovery room, and I went to her and sat down, and it was a very quiet moment. She was heavily sedated, and all I could think of at that moment was, how can I help? I don't know anything about medicine. I'm in the dental field, but I work with insurance carriers. How can I contribute towards their care? So to me, this was one of the more sacred moments of my life, or at least my marriage. Not too long into that experience, some guy comes knocking on the door, opens the door and says, "Congratulations, Mr. Tuine. My name is so-and-so, and I'm the billing manager of this hospital." And at that moment, I was kind of confused. I was confused as to why a billing manager was there as opposed to a doctor or a nurse. And this, by the way, was at 11:30 at night. The gentleman comes in and says, "Mr. Tuine, I'm here to represent the hospital because your son needs heart surgery, and he needs heart surgery now." So he presents a document to me that's about 500 pages long. Now, for those of you that are on this call, if any of you have used a consent form, if you do use consent forms, I can guarantee you that your consent forms are 1 to 2 pages. But receiving a document that was 500 pages long was a bit intimidating to me. I then proceeded to ask him what these documents meant. You know, by law, I have a right to be informed as a person who's making a medical decision on behalf of my child. With great hesitation, the billing manager finally said, "Ben, these documents essentially state that our specialists, the cardiothoracic surgeons who normally provide this open heart surgery, they do not participate with your health plan. However, our general surgeons participate with your health plan, and they are going to be made available to perform the surgery." Now, this is an open heart surgery, and they needed to get this done within the next hour, otherwise my son wouldn't survive. But he kept pushing me to sign the document. All I can think about in that moment was, how dare a health plan get involved between what a child needs and good quality care? So at that moment, I decided to sign a consent form. It wasn't the 500-page consent form. I asked them to give me a consent form that it was a full waiver to to my health plan, full waiver of the use of insurance. In other words, I signed a waiver that allowed me to pay for this surgery completely out of pocket. And I did that because I wanted the cardiothoracic surgeons in there. And this is why. When I asked this billing manager, what's the survival rate difference for this procedure between a general surgeon and a cardiothoracic surgeon, the cardiothoracic surgeon success rate for this open heart procedure was above 90%. And some doctors were 99%. The average success rate for a general surgeon for this same surgery was less than 15%. Now that's 15. I think anybody in their right mind would go for the cardiothoracic surgeons. Of course, this is my first child, thinking we may not have a second chance to have our own biological child. So we went with the 90% success rate, and I think that set the stage for how we looked at his care. I mean, look at him. Beautiful child, beautiful teeth, beautiful arches, beautiful smile in general. But we approached his care from the perspective we have to have the best doctors in here. Everything from the retina specialists to the pediatricians to even the pediatric dentists, we sought out the best, and we paid a price for it because we believe that quality care physicians are worth every penny. And that's really the reason why we're having these webinar series about negotiating with insurance carriers, finding an insurance replacement product. In my mind, I believe that what Kadir has to present to us today really is an insurance disruptor. This is a program that will help you get paid better, help you protect the quality of care that you provide, so that there are no decisions or temptations to not do treatment on patients or not do the right appropriate treatment on patients. And I say that unfortunately because in this day and age, a lot of larger group practices are getting sued for providing care that patients don't need, or they're upcoding a two-surface composite as a four-surface composite, all for the sake of finding ways to maintain a high level of profitability. In my mind, insurance needs to exit the industry. And of course, I can't recommend a boycott because that's against the law. But the purpose of inviting Kadir is so that he can go through a program that will give dental practices an opportunity to engage in a battle to where you can be successful protecting the financial integrity of care that doesn't involve you billing insurance carriers 98% of the time. So Kadir, welcome. Thank you for joining us today.
Thanks ever so much, Ben. I understand you're going to transfer control of the presentation to me at this point. That's an incredible story, and one I can say I'd heard for the first time. You know, it's almost impossible to compete with the emotion of all of that and the real human sort of life that you start to see here. I'm going to just take a second to make sure that I can put my screen on, so just give me 1 second.
Sure.
As I do all of this. And in the meantime, what I'll start to do is tell you a little bit about ProCare and what it is that we are about to do. So, Ben, have you transferred across the screen at this point? I understand that I am the presenter.
I did.
But I'm just looking for where I can actually show my screen. That's the only thing I'm trying to find here. I can see a webcam. Here we go. Hang on. Here we go. Show screen. There we go. Wonderful. My screen clean. There we go. And Ben, just do me a favor and let me know that my screen is in fact visible.
Perfect. You can see the disclaimer.
Beautiful. And I want to get rid of that after your story about the 500 pages. So here we go. Okay, beautiful. And then I've just got this little panel that I'm going to try to minimize while I do that. Thanks for bearing with me, folks. Give us 1 second here.
We're privileged to have you on the call, Kadir, so take your time.
All right. Thank you so much. So we've got that going on, and then we're just going to flick this to master size. And here we go. Okay, listen, it's an absolute privilege and an honor to speak to all of you. I hope to do so at some point in person, as we're frequently in the United States. My name is Kadir Ahmed. I'm the CEO and founder of ProCare Dental Services, which is a subsidiary of a company named Equalizer Pro Services. I'd like to spend the next approximately 30 minutes explaining to you why together we can do exactly what Ben talked about. We can actually be in a position where you as dentists can control the entire insurance coverage industry. The entire dental coverage industry will belong to dentists if you do a few simple things that you're legally entitled to do to work together. There's hundreds of billions of dollars at stake from a financial point of view, but I think as Ben's pictures of his premature baby point out, there's a lot more at stake than just that. What is really happening, as somebody said the other day in one of my presentations, is we're not in conflict with insurance companies, believe it or not. There's really instead a very different kind of a war going on, a war between common sense and a war between waste. What we have for you today is an opportunity to work together with people who share your clinical values, really to get rid of waste that causes the kinds of insane situations that Ben's kid was put into. Obviously Ben was there as a parent to try to prevent that, but really his son, who was helpless and vulnerable, was in that position. So I want to tell you a little bit about Equalizer, because what I'm about to do is suggest to you that by removing insurance from your practice in stages, we'll explain how to do that, and replacing insurance with a coverage plan that you control, with fees that you set, with no adjudication other than that between you and your patient. Why doing that is the first step to transforming the economic value of your practice. Now, in return for helping you do that, I have some conditions of my own. They're not insurance-type conditions. In fact, they probably surprise you. The conditions I have, and I can sum up this entire presentation in 3 lines. Number 1, do your best work. I'm going to repeat that. Not sure an insurance carrier's ever said that to you. Do your best work. Do what you think the patient needs. Number two, share the data from that work with us so that we can help you behind the scenes figure out if you could have done that work even better. No liability, no harm. Just do your best work and share the data so that we can all improve together. And then number three, if you do those two things, yes, you'll achieve economic results far beyond what anyone has ever told you was possible from the dental profession. So I just flashed that trade on your screen right now. Do your best work. Let us help you measure how you're doing from a clinical point of view. Are patients, in fact, getting healthier under your care? And if so, could they become even more healthy as a result of techniques that other practitioners who share your values are trying in different practices across the country? We call that model of work an independent practice association. It's where dental providers who share the same business and clinical objectives, and more importantly, share the same values, work together and have the legal right to negotiate directly with people that buy dental coverage. So that would be employer groups, that would be third-party administrators, municipalities, universities, schools, and hospitals, and yes, insurance carriers themselves. You have the legal right to organize yourselves to do that. We're going to show you how to do that. And in return, we're going to take you to a financial place which people told you was never possible in dentistry. And we're going to talk about that in greater detail. I'm talking about keeping 3 to 6 times more cash than you do today from your dental practice. I'm talking about a dental practice whose economic value at sale would be 10 times greater or more than you have today. Now, I can't physically look at you when I make this presentation, but I know if someone from outside any of the businesses I had run had come to me and said, look, you can keep 300 to 600% more cash from your company than you do today. You can make 10 times more on the sale of your company if you ever decided to do that than you do today. The first question I would sort of have, once I was done rolling my eyes and getting out of my chair, would be, why should I believe anything that you have to say? And so, you know, that's essentially what I want to tell you a little bit about us. It's the most obnoxious part of the presentation. I'm already apologizing before I start, but I think you need to hear this part for the rest of it to make sense. ProCare is a division of a company called Equalizer Pro Services. Equalizer has 4 key partners. I run and own the business. But together, each of the partners in this company has helped make a business owner like you, starting out from a position of no profit or starting out from a position smaller in value than your dental practice, we've helped those business owners make over $1 billion, 5 times, 5 different sets of people. Now, I don't know who normally provides you with dental advice, and I'm sure they're excellent people, but part of the advice that you get in life comes from the questions that you ask. So if you ask someone who's operated a dental practice for advice on a dental practice, I'm sure they'll give you excellent advice on how to make that practice profitable, how to hire the right staff, how to negotiate, as Ben does a wonderful job of, with insurance carriers. I'm sure they'll answer the questions that you ask them. It would be pretty rare, though, when you're running a business the size of a dental practice, to have access to people who've made somebody else $1 billion even once, let alone 5 times. And we've done that. It's more than 5 times, actually, when I get into it. To give you specifics, which, I mean, this is a sort of a confidential piece of information, and we don't generally like to talk about our clients for obvious reasons, but just really, really quickly, my partner, Wes Skitch, was a chief operating officer of a company called the Future Shop in Canada. Basically, he worked there when it had just 1 store, as I believe he was one of the first employees. I think he was the 4th one, maybe the 9th. In any case, he ran that company's chief operating officer from 1 store all the way up to billions of dollars in sales before it was bought by a company called Best Buy. He then ran Best Buy and Future Shop in Canada as chief operating officer before becoming chairman of Best Buy in China. Best Buy is interesting to this because they are, in fact, an insurance replacement company. A significant portion of their profit, a very significant portion of their profit, comes from a very tiny percentage of their sales, and it's from the insurance replacement, which you know as an extended warranty, that they offer on their products. So part of what we're telling you we've done 13 times before for companies like Best Buy, which is replace insurance. My other partner, Rich Lowe, who's unable to be on this particular call, has been a business partner of mine for 20 years. Wes has for 12. Rich was the EVP of a company called the Watt Group. The Watt Group, W-A-T-T, designed the first Home Depot in the world when it was just a concept in Atlanta. Obviously, that has grown to become a multi-billion-dollar home improvement retailer. Richard's next client was a gentleman from Arkansas named Sam Walton. Sam, at the time, ran Walmart stores and owned them, and basically Walmart wanted to get into the food business where they had $0 in sales. Rich worked with Sam on Walmart's entry into food, and Walmart is now the largest grocery retailer in the world. After that, he worked with a company called Loblaws here in Canada, which is a massive, massive retailer here in market share, and together with the fantastic team at the Watt Group and at Loblaws, in the 80s, they were able to take profit per sales dollar from 1 penny on every dollar of sales to 5 cents on every dollar of sales, a 500% increase in profit per sales dollar. These are some of the most famous companies in the world in the countries they operate in. My other partner, Rick Camilleri, been together for 12 years, youngest CEO in the history of Sony Music. When he came to Canada to run Sony Canada, Sony was a break-even business at best in Canada. And by the time he was done, within a few short years, Sony was generating over $1 billion in cash flow, because Rick had the crazy idea that the world wanted to listen to Canadian music. And he proved it by signing some of the most famous artists in the world and originating them from Canada. After that, he had a startup which he sold to Intel, and he ran a media company called CanWest Media, which was, again, break even. So it wasn't making any profit. And then within 3 years, it generated $1.4 billion in increased equity value and a 400% increase in share price. So again, 3 guys who have been there, done that for some of the largest companies in the world, along with replacing insurance 13 times. My background, I'm the youngest guy in the group. I was a youngest nuclear engineer, I believe, in anywhere in the world, but certainly in Canada when I graduated. After that, basically spent time with technology companies, sold 3 of them in a row, met Richard, worked on corporate turnarounds, the largest of which was a division of OfficeMax here in Canada, where profits increased by 20 times in under 2 years under a strategy that we set up. Then I believe I'm the only person who's ever spent 0 time in financial services and raised over $1 billion for financial services restructuring. So we've provided advice to business owners just like you and generated multi-billion-dollar value over and over and over again. We were approached by a group of dentists who were interested in growing the value of their practice, and it's impossible to do that without asking them a very simple question. Are you any good at what you do? We asked that question about 4 years ago, and no dentist could give us a straightforward answer. So we traveled the world for about 4 years to try to identify people who'd spent a lot of time trying to figure out if people were getting healthier because of the dental care they had received. We ran into a gentleman in Seattle who spent 25 years answering the same question. He's a brilliant guy, and he has now agreed to do the measurement of the quality of care under our program using standard objective bits of data, that you collect at every cleaning. Based on that, we're going to be able to assess the risk and multiple factors of your patient's jaw to see whether or not they're getting healthier, and provide that information to you privately. And so we now had a way, after 4 years of searching, to quantify whether or not groups of people were getting healthy. And once we did that, we said to ourselves, now we can let our business track record go to work. And so here's the result of that. What you're now able to do is if you replace insurance in exchange for sharing data to tell us whether or not people are getting healthier, it's completely transformed the value of your practice. I'm now showing you a screen which just has a typical dental practice. I understand your practice may be lower in revenues, may be higher. Don't fuss over the exact numbers. The thing to look at here is the direction of those numbers. So on your screen right now, you see a practice that generates $1 million in billings. Again, there are lots that are better, there are lots that are worse. But there's $1 million in billings on this practice, and it's running at a 70% overhead rate. So 70% of $1 million, $700,000. Now, we have a lot of clients that work with us who run at a 50% overhead rate. They would do even better under our program. So lower is not bad. So now you're sitting here looking at a practice, you're billing $1 million, you got $700,000 to provide dentistry. So that's the cost of your staff, your lab supplies, your capital equipment, your rent, your heat, your hydro, all the insurance and liability that you have to carry to protect your people, all that sort of stuff. At the end of the day, when you subtract your $1 million in billings from your $700,000 in overhead, you have $300,000 left to pay yourself as the owner of the business, to cover off any interest payments on any term loans that you have, to pay the government and taxes. It's not a lot for a heck of a lot of work. And so what we're saying to you is if we take that practice and the first move we make is to sell an insurance replacement plan to employer groups on your behalf. A plan in which you are paid instead of the insurance company every month, 12 times a year. You're paid what they used to get. 80% of what they used to get is a premium. Now you get that premium. It'll be anywhere from $20 to $70 per person per month. You get that premium now. We can add very, very quickly $500,000 to your practice before any of our patients even walk through the door. And what we're saying to you is that if you make that first maneuver with us, and we'll explain to you how it all works, don't worry, but if you make that maneuver with us, the very next thing you should do is take advantage of the fact that you have $40,000, $50,000, $60,000 a month coming into this practice before patients walk through the door to get control of your expenses. And the biggest of those expenses are labor. You pay an associate 40% of billings, for example, maybe 33%, still a huge number. You pay your hygienist per hygiene hour that's billed, and so you're giving up half your hygiene revenue in some cases to these people. If you know that you have $500,000 coming in before a single patient comes through the door, you can go back to your staff and renegotiate and say, look, let me pay you a salary so that you know your basic needs are covered, and let me pay you a bonus for the work you do per procedure, but that bonus is going to be nowhere near what you were paying before, and you can still have the staff come out ahead. And so as a result, we know you can get those billings down overhead-wise to $500,000 because there are lots of practices that do it. Now I've got $1.5 million in billings, but because $500,000 is predictable revenue, you have $500,000 in overhead, which means your pre-tax cash flow is $1 million before our patients walk through the door. And you keep all of the money from the patients who walk through the door in the form of copayments. So simply by working with us on insurance replacement, just phase one, you can triple your bottom line cash flow in the company. And we've done this many, many, many times. This is a conservative underestimate of what's going on. Some of the work we did with gas stations, we would replace 6 gas stations with 1 gas station. The strategy, the one would outperform the 6. In this case, we're saying that 1 year of your life will generate more in your pocket than 3 years of your life used to at a minimum under our program. And that's not including once the patients walk through the door, when they're also paying you for the work that you do on a fee schedule that you set. Now, we'll cover off phase 2 later because this isn't the podcast to conquer the entire world. The phase 2 involves something called co-management, in which you're going to integrate complex cases done by specialists with your GPs in your office. And you're going to be able to generate an additional $900,000 by doing diagnosis and follow-up without adding to your overhead, which should take you to $1.9 million in cash flow, all right, out of $2.4 million in billings. So what you've done directionally is you've 6x'd the cash that you keep, and you have more than 10x the value of your business, because a great deal of the money we're talking about will be contracted to you over multi-year periods. When you have contracted revenue, in addition to revenue from people just walking through the door, the value of your business grows because anyone wanting to buy into it knows already how much profit they're going to make. That's why a McDonald's is worth more than Joe's hamburger stand across the street, because people feel McDonald's earnings are predictable. Not that you're going to provide McDonald's standard of care. I'm just making an analogy. So that's the direction of what we're talking about. 3 simple changes. Number 1, offer a direct-to-employer insurance plan. Number 2, use the predictability of revenue from that plan to control your overheads. And number 3, introduce co-management. These are the 3 tools we want to begin our journey with you, so that basically you're in a situation to 6x your cash flow and 10x the value of your business. So now let's dig into the first part. The first part of this was that we basically have said that you're going to be able to work directly with patient groups. You're going to be able to work with employers, municipalities, universities, schools, hospitals, people who employ millions and millions of people across the United States in your town, state, and city. You're going to be able to work with those guys and get them to pay you as opposed to an insurance company or a third-party administrator. The administrator or insurance company will just become a collection agent for you and the dentist who sign up in your area. Why would they do that is the first question you're going to ask me. And the simple answer is they'll do it because it costs them less money, because it gets them a wider set of services, because it multiplies their claim cap, because it lets them cover everybody in their group, regardless of whether they use the service or not in a given year, and because it lets them lock in savings for 5 to 7 years, where right now they've been increasing rates 6% a year for 30 consecutive years. How is all of that possible? Am I Santa Claus or the Tooth Fairy? No. I'm going to explain to you the two most common sources of waste in an insurance program that is run on claims reimbursement, which, by the way, is all of them. Number one, the way insurance works today, whether or not you pay claims or whether or not you pay premiums into a pool, doesn't matter. At the end of the day, you have a third party collecting money or agreeing to pay claims. Let's use the money collection example because it's easier to follow. Employers pay the insurer premiums. Those premiums are then held in a reserve, okay, in a gigantic trust account. Now, when claims come, basically they are paid out of that reserve, and there's a difference between the money that was collected and the money that was paid out, which is a surplus, okay? The problem with this system is it doesn't matter whether you're the nicest guy in the world or the meanest guy in the world. If you're collecting money and you don't know when the claims are going to come through the door, you have to hold back a significant portion of what you collect just in case everybody wants dentistry on the 360th day of the year. You have to. It's common sense. You and I would do the same thing if we were stuck with the same rules. So that reserve can typically eat up about 33% of the money that's collected, and it's common sense. If you work on a claims-based system, you have to have it. The second thing is you don't know which of the claims are valid and which of the claims are fraudulent. So you have to investigate a percentage of the claims, and that's called administration, where you decide which of the claims you'll accept and which you won't. That means that 4 guys at the insurance company have to argue with 4 guys in your office, or gals, depending, to be gender neutral, to ask for predetermination information, to ask for examination information, x-rays, et cetera, et cetera. That's an expensive process of fighting with you, claim by claim. That process, again, has to be done. You and I would do the same thing if we ran an insurance company. We'd want to know whether or not those claims were valid. So that can eat up 3% to 20% of the money that's collected. But let's add those two numbers up before we go any further. You have 3 to 20% for admin, and you got 33% for a reserve. You've just consumed 36 to 56% of every dollar that's collected, and you haven't paid out a single claim. It's gone. And it's not because anybody's a bad guy. It's because that's how a claims reimbursement system works. It was never designed for something like dentistry. That system was designed for something like life insurance, where you have 1 million people and maybe 10 of them die. Or casualty insurance, where a guy drives his car into a tree. Things that you didn't know were going to happen. When you have a high frequency of claims in a group, like in dentistry, and when you can predict those claims because everybody books a hygiene visit, insurance was never the model that was intended for group coverage. It never was. It never made any sense. And so what you have is a lot of waste in the system, and what we say is no, get rid of that waste. How do we get rid of that waste? First, remember that chart I showed you with your overhead expenses? If you can get rid of your overhead expenses in an office, the variable cost of fulfilling a claim when somebody walks through the door, it's not quite zero, but it's really low. It might be a nickel on every dollar. It might be a dime on every dollar. It might be, worst case, 20 cents. But let's take a dime as a reasonable number. When an insurance company or anybody who's working on a claims model has to pay a claim, they're doing so with 100-cent dollars because they got to pay you in cash for the claim, right? Now, maybe they get you in a network arrangement where they're paying you with 85-cent dollars and all that sort of silliness. But at the end of the day, they have to pay you in dollars. If your overhead is already covered, your cost of satisfying the claim with a service, because you own the plan, might be a nickel or a dime, which means you have anywhere from a 5-to-1 to a 10-to-1 price advantage over an insurance company if you offer insurance yourself or something similar to it. Let me say that again. If you as a dentist offer coverage yourself and your overhead is covered, 2 things, not 1, 2 things. If those 2 conditions are true, then what happens is you have a 5-to-1 to 10-to-1 price advantage over any insurance carrier in the country, no matter how big. And every employer with an ounce of sense figures that out in about 10 seconds once I walk them through that math, which means you no longer waste money on administration because you don't have to fight the claim anymore because the claims are approved. And number two, it means that you don't need the reserve anymore because the patient copay replaces the reimbursement under the program. So from an employer point of view, we'll get to why you want this, but let's cover why they want this. From an employer point of view, for the first time in 30 years, we can double the claim cap on their plans. Claim caps on plans have been flat for decades. We could say to them, you know what, double your claim cap. And before they look at us like we're clinically insane, we say to them, and you know what, you can do that at up to half the price that you're paying now for coverage. Now, I've never had an employer ask me to go all the way to half price off. Never. Usually, if you can cut prices by 5-10% and keep them there for 3 to 7 years, or whatever the number is, the term that they're interested in, you know, they will look at you like a heroic figure, like Batman after he saves the child from a burning car. Because they are in an environment where every year they've been paying 6% more for 30 years, and the claims cap's been flat. So if I offer up to half the price for definitely double the benefit, I'm already heroic, but it gets better because I don't have the adjudication problems. I can then turn around and say, hey, wait a minute, why don't I include all procedures? Your plan probably has restrictions over what is and isn't covered. And most importantly, why don't I make the plan fair? Right now, when you work on claims reimbursement, what happens? You collect money from a group of people, you then deny a group of people, and you pay another group of people. You know, there are words for that in organized crime. I'm not going to say that insurance is because it isn't, but I mean, at the end of the day, you're taking money by promising something to an entire group of people. You know right off the bat you're not going to keep your promise to most of those people because a lot of them aren't going to show up, in which case you just took their money and hoped they didn't notice, or B, they did show up and you denied the claim anyway. That's unfair. Employers know it. Under our system, you can come in as a person one at a time. Every single person gets covered. Here's what happens. If we charged you, for example, $400 for a $3,000 claim cap, and you didn't use it, next year your claim cap goes up to $3,400. We give you a credit for the service you didn't use. Why do we do that? Because the raw cost of fulfilling that additional $400 at 10% is $40. You take that trade any day of the week. And so what we have is, if you want to know why employers choose to plan, it costs them less. They get double the coverage. They get all their dental services covered. They get rollover if someone doesn't use the service, and you can lock the gain in for multiple years rather than as a one-year see what happens later type of a situation. That's why in Canada, when we started talking to people about this, we had 5 million people lined up for the first 100,000 dental spots under the program. That's why employer groups like the deal. Now you say, wait a minute, how are you going to get millions of patients at the same time? I get it. If you went to one employer at a time, there's a lot of employers. Here's the catch. Most employers basically run their dental plans either through insurance companies or through what they call TPAs, third-party administrators. The employer doesn't want to be seen to be denying claims for his own employees. Aside from that, they don't know how to credential dentists and do all that kind of stuff. So what they do is they assign this task to an administrator who collects money, is licensed by the state of Texas or California or New Jersey or whatever state you're in. They're licensed to collect that money and make sure they're not criminals or anything so that they can keep that money legally because it belongs to employees, and then they pay out claims. Those administrators work for hundreds and hundreds and hundreds of employers. So a small administrator might have 100,000 employees, one administrator. A big one would have millions. Insurance companies themselves have administration arms where they have millions underneath them. So it only takes a few phone calls to reach millions and millions of patients because of the administrators who run them. We go to those administrators, we say to these guys, look, you're about to go back to your employer and ask for a 6% raise in price again. Why don't we go back with 0? You're about to go to your employer and say that fewer things can be covered under your ever-shrinking claim cap. We're going to say double the claim cap and keep the cost low. And then we go through the whole argument that I just made to you. And the TPA asks one question, how can you do it? We explain how you have to pick one of our dentists, how that basically gives you an opportunity, to eliminate the overhead of the operation. And they understand right away that any business run on variable cost is a great business to be in. Now, If somebody does not want to switch their dentist to one of ours, the administrator keeps them on the same terrible plan they have now. They don't lose. But for everybody that shifts on our plan, the administrator's revenue becomes profit because they don't have to spend any more money fighting with you on claims anymore. When patients come in and you want the patient to pay, the typical plan is a 50-80 copay. Patient pays 20% or 50% up to a claim max. You just collect that money and keep it yourself. You provide a discount for the balance, and that discount is subsidized by all the money we paid you at the beginning of the month from the people who didn't show up. So we'll walk you through how that works for you so that it's better than cash. But the bottom line is, for an administrator, this is a much simpler program to administer. It's way more profitable, and they get to look like heroes when they go to their millions of patients through their employers because they're giving them better coverage at a lower price because they're eliminating reserve waste and they're eliminating adjudication waste. So that's how we get the patients. Now you probably ask, well, how do I get paid? You know, and then how does this all work? Well, our answer is you set your own fee schedule, and it is very difficult for you not to be paid better than cash under our fee schedule. Let me show you why. What I'm going to do is show you on your screen right now 3 columns. This is the simplest app in the world. You master this, you'll understand the entire program. The left-hand side of the app says what we paid you in the month of January. So in this case, it's $41,666.67. That's the money from every patient that picked you, whether they come into the office or not. That's 80% of the premium that we charge the employer. It goes from the employer to the administrator to you. So you know you have that money. Now the thing is, 1,000 people or 2,000 people may have picked you, but 2,000 people don't need a root canal on the same day. So the people who come in, you provide work for. Usually it's a 50-80 copay plan. So you're now collecting either 50% of the procedure or 20% of the procedure, or if it's a cleaning, probably nothing of one cleaning. You enter that work into our computer, which means you've provided a discount. It means you lost money over your full fee schedule. You either lost 50% of your bill or you lost 80% of your bill for that work. That has a financial value on your fee schedule. When you add up all of your discounts in this month, it's $10,000. We do that for you. So now we're saying to you, we've already given you $42,000. You have given up $10,000 over your best fee schedule. The difference between the two is $32,000. That means that we paid you $32,000 more than if you had collected cash from the people who actually walked in the door on your best fee schedule. You got $32,000 more than if these people paid you cash. Now I know what some of you are saying before you even start. What happens if that number in the middle is bigger? Wise guys, what happens? And I answer to this is we give you 3 tools. Number 1, if the patient is coming in wants to come in on the 3rd week of January, and that $10,000 number is now, say, $39,000. So you're almost at the point where you're right at fee schedule. You can refer that patient a week later to yourself. Because in February, guess what? You get another $42,000 and your discounts have gone back down to 0. So that's your most obvious maneuver. Second, you can refer the patient, if the work requires a specialist, to a specialist at no penalty. Remember I said we gave you 80% of the money that was collected? 20% goes to specialists. So the specialist is paid out of a different pool than you are. So the specialist treats the person, and again, you got the fixed revenue, you didn't take care of the procedure, you didn't have to, the patient remains yours. You're still ahead financially. And the patient got treatment from a specialist that's a pretty high standard of care. Third, let's say it's a filling. A lot of our people in different towns and cities run group practices where they want to develop their younger staff. They know that if they've already covered the cost of that staff because their fixed cost is already covered, they want the staff to develop experience. So they say, I want to be a rollover office. A rollover office will treat your patient without any penalty to you on the fixed charge, strictly for the copay from the patient, even if it's 0, because the owner of the practice wants to improve the skill set of his associate. So again, we give you 3 tools in case the volume grows. to the point where it's threatening your full cash fee schedule. Number one, refer to next month. Number two, refer to a specialist on the spot as part of our program and paid separately. Number three, refer to a rollover office. With these three tools, it is difficult to impossible to see a situation where you are not paid better than your best cash fee schedule underneath our program. So with that, now you understand basically the chart that we had in the beginning of this presentation. We are going to collect money from employers. We're going to use 80% of the net from that to pay the general dentists that those employees select. You are now getting a new revenue stream before patients walk in the door that is the same as insurance companies have made billions on for years. You're not going to do it at crazy numbers. You're going to do it for people you could treat. But because we pay 80% of what's collected, you should be able to generate $500,000 very easily in incremental billings from 1,000 to 2,000 patients, half of whom probably won't show up. Once you have that volume, we give you a simple app to police the number of people that come in so that you're always giving them the best possible standard of care. That's why we do this as a group rather than one dental office at a time, either by referring them the next month, referring them to a specialist, referring them to a rollover office. We gather data from all of the people being treated, and we issue risk assessments privately to you to let you know whether or not the patients in your care are getting healthier. And that's how we police quality of care, not just from you, but from everyone else in the program. Nobody can game the system because it's transparent. All the money paid by the TPAs is shown. All the referral percentages are shown. What I am paid is shown. Everybody sees what everybody else is doing. So as a result, you know, if one person's referring out 90% of their cases and everybody else is doing 70%, all of us are going to have a chat with Mr. Referral Guy, and we'll catch it in a matter of days. So basically where we're at is a situation where, in summary, you can measure the quality of care that you're delivering, start to gather data. That data set becomes a means of improvement. You take the insurance company out of the business, and with it, you get rid of the reserve waste and the administration waste. You have a wider plan, and this is just the beginning, guys. This is a base plan. You can sell extended plans to people, and the biggest thing that I haven't even covered, you can sell all the people in your office who don't even have any coverage today. One at a time, they can join in your office through our administrators. All the people that have no coverage suddenly have coverage now. We just deduct a very reasonable fee that's a fraction of the insurance cost elsewhere, and now they become part of your overall plan as well. You're doubling your addressable market since half of North America has no coverage right now. All the people that are lawyers with single offices, accountants with single offices, web designers, real estate agents, entrepreneurs, a lot of these guys, they can't get coverage because they're not in companies that have enough employees to give it to them. So, yeah, there's a lot of reasons why you want to do this plan and why basically it makes you a ton of money while at the same time allowing you to control your quantity of care. The one question that people ask me that I always have to laugh my head off is this capitation? And I always chuckle because, sometimes there's a guy, there's always that guy in the bar who wants to seem smarter than everybody else, and he heard a word on the way in the door, and he basically throws it down. It's like his word of the day, sort of, I used to call it word of the day toilet paper in the consulting business, right? The guy didn't know what something meant. Let me explain to you something. A capitation plan would pay you typically, we've seen as low as $1.50 per patient per month to quote-unquote high, and I'm saying this with a grin on my face that's not a happy one, of $8 per patient per month. If you wanted to generate $50,000 a month in fixed payments, and you divide that by 8, you'd have to see 6,000 patients under the program. You could not see 6,000 patients in a typical office and see anybody else. So my entire business plan of eliminating your fixed costs and at the same time letting you see other patients is impossible. Under our plan, the worst case scenario is you're getting about $20 to $25 per patient because you pick the plans you opt in on. Realistically, it's probably more like $30 to $40 per patient, which means we're paying you 5 to 10 times more per patient. When you are paid 5 to 10 times more per patient, guess what? You can see 1/10 the number of patients. which means you can go on treating your other patients without any problem under my plan, and my plan turns those other patients from revenue into profit. Number two, on capitation plans, the capitation company decides the fee schedule. In my plan, you decide the fee schedule. In their plans, the capitation company decides whether or not you're going to get paid on their terrible fee schedule, so you still have to employ the 4 people to argue with their 4 people on the terrible fee schedule. In mine, everything goes through, and you set the schedule. So if you believe being paid 5 to 10 times more is the same thing, the old joke is like that's like comparing a man who pushes a woman into the path of an oncoming bus to a guy who pushes the woman out of the path of an oncoming bus, because as William Buckley used to say, I guess they both push old ladies around. So this is nothing like any plan that has ever been devised in dentistry, because this is a plan that is designed for dentists, by dentists, to create a direct relationship between the dental group and the employer group with nothing in between. My fees are 300 basis points on admin and whatever breakage exists in the specialist contract. That's it. And those are transparently disclosed throughout the entire process. So that's basically a summary of the overall presentation. I'd like to turn it back over to Ben to answer some questions. It's been an absolute privilege to work with you. Basically, to join the program, I know Ben will get into this, you just go to procaredent.com, and that'll let you do it. If not, Ben's got some email addresses where you can do this as well. Let me just turn around and change the presenter. With that, Ben, I'm going to ask for your help here.
Yes, absolutely.
Have you restored yourself as presenter right now?
Yes, sir.
You have.
Yes.
Wonderful. Thank you. Why don't you hit me with any questions that you have, sir?
Yes, thank you. And then Jordan Comstock, go ahead and unmute. Actually, got you unmuted here. Before we ask the questions, I always, and thank you, Kadir. I am so happy that those that are on have had an opportunity to listen to this. If any of you have a question, just go ahead and pull up the chat function on your GoToWebinar menu bar, and you can submit a question there. We actually did receive a few questions via text and email, but I always like to ask what's next. And I can't remember where I heard it. It wasn't in dentistry, but it was another cause that was going on. And they said, if not now, then when? In terms of talking about a revolution, if not this, then what? And I joke and I tell my clients and dentists in my presentation meetings, don't do what this guy did, because your colleagues aren't really your enemy. In my opinion, some would argue that the insurance carrier is the enemy, but I like what you said, Kadir, about the claims payment process. To me, that is a flawed system, and that's what needs to be fixed, and what you have is a great solution to that. So Jordan, why don't you go ahead and tap into a couple of the questions that were sent to us.
Yeah, you ready here, Kadir? I got a couple questions.
Absolutely, go for it. I forgot to tell you what it costs to join, but anyway, go ahead and ask questions, and I'll get into that too.
Okay, the first question we have here is from one of our attendees. It said, you mentioned you have a dentist in Seattle that will perform quality control. Does that mean participants will get audited from time to time?
Yeah, so what happens is it's not just one dentist. I dislike naming him because I don't want to put him in the crosshairs, but he's an incredibly well-respected dentist who has an institute, and there are several thousand dentists in the institute to help us with analysis. So what happens is we gather pieces of objective information. There's a scan we do from a scanner we pay for, which gives us objective measures of every aspect of the mouth. There's about a 120-point questionnaire it's free, that we ask patients to fill out as a random sample. There's 6 photographs and a Panorex. So these are the elements of data that we look at to try to sample what's happening to the health of the population. And from that, we submit a 4-factor risk analysis, on different aspects of the patient's dental health. One related to their bite, a second related to cavities, et cetera, et cetera. So you get a score from all of that, and so you can use that privately to sort of assess what's happening to the overall health of your patients. That's how that works. It's all done objectively online, and none of it is shared in any kind of punitive way. There's no negative financial consequences. It's just designed to help you assess how you're doing and how you might get better.
Awesome. Thank you. Let's see. The next question we have is, what are the qualifications to join this plan?
Okay, so generally, you remember you are sharing your data with us. So in general, we prefer people who have been in practice for a little while. In general, have been 5 to 7 years is good, and beyond that, we like people that have taken courses, CE that they take seriously, trained on technology. But at the end of the day, here's the thing: you can opt into the individual plans that you participate in. So if you're a little bit younger and you don't want to do complex work, there are plans for certain organizations where the members of that organization, for economic reasons, aren't going to buy a lot of complex care. For example, let's say we did a deal with the, a culinary workers union where the average member is making maybe, minimum wage working in a kitchen. Folks like that on their dental plan, in general, they're going to do a lot of really preventative work and a lot of sort of routine basic work. So you might say, okay, if I'm a younger dentist or an associate, I might want to participate in that plan. On the other hand, we might pitch a large Fortune 1000 multinational company that's an investment bank, where people have soup to nuts deluxe coverage and they want to look like movie stars every day. So if your practice has a strategy to do a lot of high-end restorative work, that plan will be more expensive. The customers and the patients will be more demanding, and so as a result, you might get a lot of that type of work. So you get to opt in and out of what's out there. What we suggest you do is we give you a lot of information around each of the plans that are being submitted, and you just opt into the ones whose customers and where the type of work is a fit for the strategy you have for your dental practice. That should cover a wide variety of dentists. The key thing which we cannot measure is we want to know that in your heart you want to become better as a dentist every day. You do that, the data will show that over time, and we'll gather the data with you, and over a 5 to 7 year period of time, we're quite sure you're going to become a much better dentist through this process.
Awesome. Thank you. And we got another question here. Someone saying, so there's no claims, correct?
Well, here's what happens.
No
every time you do work, I apologize, a little bit of cough here, Jordan, but every time you do work, you file it in as though it's a claim, but all claims are approved. So the discount that you provide gets logged, and we use that. So it is kind of like a virtual claim in a sense, but it's always approved. And the other thing that we check, of course, is that the patient is under their cap. So if they use up their cap that year, for example, we check that, and then after that, they pay dollar for dollar on the fee schedule. So that's how it works. So I would say technically there are claims, but they're all automatically approved because you decide whether or not they're approved. That's how I would word it, Jordan.
Okay. Very interesting. Cool.
Perfect.
Ben, that's all my questions so far.
Yeah.
Did you have some more?
I do have
a go ahead, please.
I have a long list, but I can't. We're not going to go through all of them. But the next interesting one is, how aggressive is your employer recruiting? You talked about reaching out to large employers and small employers. How aggressive is that, and when do you start?
Yeah, so we've already started, and so we're in discussions with TPAs in the United States already. In Canada, we started with 4 different administrative groups. We already have 5 million employees that are basically under negotiation right now with 4 to 5 conversations. So what happens is the employers delegate their dental plans and entire group benefit plans to these administrators. You go to the administrators. The entire United States has 2,500 administrators. The largest of them has over $1 billion in revenue. So you just start with the administrators in a city or town that's the same city or town as where dentists are, and each administrator right away will get you a few 100,000 patients just because of that's what they have to run in order to be successful in their business. So that's how that works, Ben.
Perfect. Thank you. Next question here is, this sounds like it has a potential to give Delta, United Concordia a run for their money.
Yeah, we don't make any apologies for the fact that some people in the insurance industry will not do too well. However, there are folks that we have a lot of respect for in the insurance industry who do run what we call ASO plans, where they're just paying claims for people, and they're in an incredibly competitive narrow margin business where they don't even collect premiums anymore. For those people, we actually are going to be more profitable than their current model. It's the model, guys. It's not the insurance company. It's a bad model. And basically, if you change the model, insurance companies have millions of customers for you, patients for you that you can heal. The problem is they're not making, they're not doing as well under the model because of all the cost, with fighting with bad dentists and even good dentists on good claims. So our model gets away from all of that so they can become much more profitable. There's one other thing that most people don't realize. We can cover the uninsured. Under the claims reimbursement model, half the country is no good to the insurance industry because they can't take people one at a time. We can help those guys make money on people that they could never work with before, so we double the size of their market and yours. And so we have a way for the open-minded ones among them to make a lot more money because they're saving a lot more people. So this is not really you against them. This is really you and them working on a much better system. Having said that, there are a lot of people that have opted out, employers, from the insurance system with TPAs, and they're just running their own self-funded plans. Those are our first targets, and then we'll approach the big carriers after that. And some of them will get it, we hope, and maybe some of them won't. But at the end of the day, you're all going to be too large for that to really be much of an issue.
Perfect. Thank you. Next question is, I practice in an area where HMO/capitation plans have a great presence. Is there a credentialing process to become a participating provider with your program, and are there any fees associated with being a participating provider?
Absolutely. So thank you, because I was going to get to that. What does it cost to join? Yes, absolutely. So today, if you join now, basically, before a patient group is signed up in your area, your fee is $6,500 for 2 years. The 2 years start from the date at which you join. No, sorry, the 2 years start, I apologize, don't start from the date at which you join. They start from the date at which your first patient walks through the door. So you pay now, but the calendar starts from when the first patient walks through the door. That's about $3,250 per year. You should get at least 2,000 patients, which means that you're paying $1.63 per patient. We think that's, well, to put it mildly, a heck of a deal when you compare that to $250 to buy a chart, up to $500 to do the same thing. We believe very, very quickly that basically, as we are negotiating with patient groups already, once we have patient groups in individual areas, we will change that price to $5 to $10 per patient. So you're saving you're saving a fifth to a tenth of the price, 80% to literally 900% on the price. Number one. Number two, the second thing that happens is that you basically become first in line for our co-management program. You become first in line for our equipment refinancing. You become first in line for our shares in dental offices bought at higher value. There's a whole stream of other things in addition to this that our team is bringing to dental practices to make them incredibly valuable and profitable, and you will be the first people that get their hands on all of them. In terms of credentialing, we work with the TPAs, and the TPAs sort of handle that process. So if you're credentialed under normal TPA programs, you'll be fine. Chances are very strong that you're already working with all the TPAs we're going to sign anyway, because these people you're already providing coverage to their patients in your area. So you'll actually recognize the names on the electronic funds transfers being made to you.
Perfect. Thank you. So here's another interesting question. I am a member of a dental cooperative that consists of doctors who are independent practitioners. Although it's not the main focus of our group as a whole, we do believe as individual doctors that quality care is at the forefront of what we do. As solo practitioners, our mission is to protect the integrity of the solo practitioners. My question for you is are large group practices allowed to participate with this, or are solo practitioners who don't provide great quality care, are they too permitted to participate in your program?
All right, so let's answer this a couple ways. We have talked to one or two large, excuse me, I apologize for the cough there. We are dealing with one or two large groups, like what you would call DSOs. In general, they don't really necessarily fit what we want to do. Our focus is really on practices owned by an individual or a family, or where there's a single owner. The reason for this is that if practices are owned or controlled by strictly financial groups, as some out there are, typically they have a mandate to be flipped and sold in a very short period of time, say 3 years, 5 years, whatever. We're not sure that that necessarily lines up well with our values. On the other hand, the independent practice owner, he's looking at hanging on to his practice, really until he retires or she retires, 5, 10, 20 years, sometimes passing it on to the next generation, associates they develop, sometimes their family. Those folks we have all day and all night for. So we love the independent practitioners, we love the small group practice owners, and we love those large group practices that are owned and controlled by a non-financial group, like a family, for example, something like that. Your dental co-op sounds absolutely perfect for what we're talking about. Those are the guys that we really want to work to help, because that's the industry that we're trying to protect. As far as quality goes, you know what? One of the things, we do everything we can to vet the people, afterwards, and if someone doesn't fit, basic criteria afterwards, we will not basically work with them. Having said that, remember, to join our program, you got to give us all the data, about how the patients are being treated under the program. If you weren't a quality practitioner, you'd be pretty dumb to do that, because we can figure out what's going on with each of the patients with our analysis team fairly quickly. So I don't pretend that it's perfect, but we're very, very committed to using the data to measure whether people are getting better, and one of those measures is how the providers themselves are doing. So, that's how I'd answer that question, Ben.
Perfect. Thank you so much, Kadir. I am grateful that you're on this call today and that you're able to answer these questions and go through the program. I know that we're about 7 minutes over our time budget here, but I'm going to go ahead and close this just with a few more slides. These are the degrees in which we can improve dentistry or individual dental practices. I talk about how 2 degrees often seems insignificant in the grand scheme of things. I mean, if you're looking at a foot, you're looking at a ½ an inch. If you're looking at something beyond just 1 foot, like a mile, you're looking at 60 yards. At 1,300 miles, you're looking at 28 miles. So now 2 degrees is becoming a little bit more significant. Quick story, in 1979, there was this flight, Air New Zealand, Flight 901. They had this tourist destination flight where they packed a DC-10 with a bunch of people. And the objective, the main goal was to fly down to Antarctica, take a look at Mount Erebus, the landscape and the penguins, circle around and come right back to New Zealand. Pretty cheap, and that's what they did back then. Well, these flights, aircrafts actually back in 1979 did not have the same bells and whistles as our aircrafts do. Technology wasn't as great as it is today. The interesting thing about this particular flight is that the pilot set course just 2 degrees off. When their indicators started to whistle at them when they were at 1,200 miles into their trip, they now knew then that they had to descend, but on a cloudy day, they didn't really know what was underneath the clouds. Because they were 2 degrees off, they were 28 miles off course by the time they reached 1,300 feet. At 1,300 feet into this flight, they descended right into Mount Erebus. You look at those 2 degrees, and you can argue that that was a fatal 2-degree error. But I like to flip that in the reverse, that sometimes we overlook 2 degrees of opportunity in our practice, because sometimes we might think that something is either too new or something is insignificant in terms of how it can affect you individually. In my opinion, at least today, this is the early stages of ProCare being promoted in the United States. We're still at the 2-degree mark, but I can guarantee you that this 2 degrees that we're dealing with right now in terms of getting the word out about this revolution, it's going to make a huge impact when you look 2, 3, 4 years down the road. So I invite those of you that are on the call to give us an email, send us an email, let us know your thoughts if you wish to sign up, or if you have any questions, please email q@procaredent.com, or my personal email, actually my work email, ben@veritasdentalresources.com.
All right, that's it, guys. Another exciting episode in the can. We thank you for listening. If you felt that this information was useful or helpful in any way, one way that you can show your appreciation for our efforts is to simply tell a friend about us and subscribe to our podcast on iTunes. Until the next show, we wish you the best of success and rock on.